Hello warriors. I hope you're all doing good. So, finally, your Jan 25 exams are done. You have spent a good amount of your time doing your preparations for your exams. This was the longest wait period I've seen someone going through your inter exams, for those who have applied for the first time, obviously, and then going through this tedious 12 to 13 days to complete your exams. I know it must have been exhausting, and I'm super proud of everyone who's written these exams and survived this battle. Now is the time for you to take some rest back and enjoy what you have been missing for the last many days. But yes, also being cautious of the mind that if you have planned to write only one group this attempt, you have very few time for you to prepare for your other groups, and so on and so forth. This is also for those students who have maybe a bit of a doubt on how you have been preparing for your this exams, and therefore you should be planning ahead for your May 2025. Again, I'm not here to take away your enthusiasm, people. You definitely need some time to regenerate yourself and come back stronger. As I promised earlier, people, every batch we take through whatever we have seen in the exam paper from ICA, and then we give our high level comments on how we think the final answer should be, so that you can also understand what you have been writing in your exams and how you should be planning for your upcoming exams in case it did not go as planned. This is my paper review of the CA Inter Jan 2025 direct tax paper for you all. Yes, on a high level, people, if I have to just clarify this to you, I have not gone into it. We'll do it together in today's class. But other than that, the paper was a little bit weird for me, if you come and ask me. Topics which were not generally very fancy and tested were tested this time. The format was a little haywire. Generally, the kind of template which ICI uses for their exam was not followed this time. A bit of a weird kind of a setup which was given in this paper is what I could see on a high level. But again, intricacies of this we will discuss in today's session. We will also try to understand if this was an easy paper, a difficult paper, moderate paper, something which you think you can manage or you can't manage. That is what we will be discussing in today's class. Today's session is for two people. One is your May 25 and upcoming students who would like to check how your paper was and to get an understanding of how you should be preparing for your exams, and also for my Jan 25 students with the limited purpose of telling you how you have performed, nothing more, nothing less. This is not me coming and commenting on how you are arrived at the answers. Your results are yet to come, and therefore me is not the person who's going to come and tell you that yes, you have done a bad job, you should start preparing right away. This is more of me giving you an hindsight of what you may have thought versus what is actually true, so that in case you think that you have not done appropriately well, it is maybe time that you start preparing sooner than you waiting for results, because that may delay the process a little further. Other than that, there is no intention of this review analysis, people. Please don't start judging yourself and seeing how you perform. That is something for ICI to do at a later stage. So don't do that. If you're with that intention here, I would request you to stop the video right away. Yes, come with an open mindset, people, just to discuss the paper. That is what my whole intention of this session is. We do this every attempt, and we are continuing to do it this time as well. Without wasting any further time, people, we're going to get into the topic. The first what we're going to discuss is your MCQ papers, just to understand how you have been doing from a direct tax perspective. MCQs are going to be straightforward. I'm assuming you would have also marked as much as I have the paper downloaded from Telegram as well. This person has also marked this MCQ, so I think you would have also done it. You can just quickly compare and verify what you have marked versus what they have marked. Word of caution, MCQs come with a little bit of a change in question numbers and everything. So maybe your set would have a different sequence of how the questions are there, but the questions at the end of the day will match, so therefore focus on the questions, don't focus on the sequence. On that note, people, I'm going to start with the MCQs. The first case study MCQs. For the first time, people, I'm noticing ICA has not given you stories and paragraphs. For the first time, case study based MCQ, 3-4 lines have been given to you, which is amazing. For the first time, I'm noticing this, which means now you can read the case study itself before even going into the English. It will not make much time. Yes, I'm reading the question along with you, people. It says, Mr. A is transferring a house property to his wife in previous year 23-24 for inadequate consideration. Beautiful. This means that this is a deemed ownership concept, people. We are in HP chapter. HP chapter comes and says when a person is transferring anything to his spouse for inadequate consideration, the original transferor will be the owner of the property from an HP perspective. She is receiving a rent of 2 lakh rupees from letting out this property and has spent 4,800 rupees as municipal taxes. This is what the computation looks like. She deposited the same with the bank and earned an interest of 15,000 rupees during the previous year 23-24. Yes, the rent which you have received, you have further invested it somewhere else, and then you have received a rent of 15,000 rupees. This is a combination question, people, between HP and clubbing. Question says, if Mrs. A had invested this rent amount in business income and had incurred a loss of 20,000, while she having another business income of 4 lakhs, the income of the rent and the business will be chargeable to tax in the hands of who is being asked. Yes, bit of an haywire question, people, and an exceptional question where they're coming and asking you, instead of the person investing the money in a other premises and getting 15,000 as rent, they have actually ended up getting another business loss from this income. Yes, for those who would have understood clubbing provisions, people, clubbing provisions come and clarify that any income on the first level will be taxable in the hands of the transferor, but any accretion happening post that will not be taxable in the hands of transferor. So the loss which has happened, people, the 20,000 rupees loss will continue to be taxable in the hands of Mrs. A. Will continue to be taxable in the hands of Mrs. A. Since Mrs. A also has a business income, she can set off these two things. She can set off these two things. That is what the final answer would be. So therefore, if I have to look at the options, option number 1 comes and says 1,36,640 for HP and Mrs. A gets 3.8 lakhs. This looks right. This looks right. You also have a 3.8 lakhs, people. Rule of elimination. I'm ignoring B. I'm ignoring D. So we need to check between A and C. Now comes the deemed ownership concept, which comes and clarifies the HP income, whatever gets taxed in the hands of Mrs. A, will now be transferred to Mr. A. Will now be transferred to Mr. A. So let's understand what is the HP income which will get, people. You have your annual rent as 2 lakh. You have your annual rent as 2 lakh rupees. You're paying some municipal taxes. Therefore, 4,800 rupees will get reduced. Therefore, your NAV will arrive as, check, people, quickly help me. Yes, what will happen? You will take 2 lakhs minus 4,800 rupees, you get 1,95,200. Removing your 30% standard deduction, the final answer will come as 1,36,640, which is what I am noticing in option number A. Which is what I am noticing in option number A. Notice one thing very critically, people. Here it is Mr. A, here is Mrs. A. So the only difference between option A and option C is that they are coming and confirming whether wife should be taxable or the husband should be taxable. We've already discussed husband should be taxable. Therefore, the answer becomes option number A. The answer becomes option number A. I'm moving on to question number 2. It says Mr. A transfers the above property for inadequate consideration with an agreement to live apart. People, we have already discussed in your deemed ownership concept, any kind of transfers happening for inadequate consideration, even if it is happening for inadequate consideration, it will not be taxable in the hands of original transferor if it is done for an agreement to live apart, or as we call it, divorce. As we call it, divorce. In this case, people, the answer will transfer to Mrs. A. The answer will transfer to Mrs. A. No other changes will happen. Then the income of the rent will be chargeable to tax in whose hands? First is Mr. A having nil and Mrs. A having 1,36,640. This is right. This is right because 15,000 is also considered here. Mr. A gets 2.15, no. Mr. A gets 2 lakhs, no. Mr. A gets 1,36,000, answer is no. Option becomes option number A, rule of elimination method. Yes. Then comes your question number 3. The income of the rent and the interest will be chargeable to tax in whose hands? People, we have already done this answer. We have already done this answer. 1,36,000 will become taxable in the hands of Mr. A and 15,000 will become taxable in the hands of Mrs. A under the head IFOS. This is what the right answer is. This is what the right answer is. Ideally speaking, question number 3 should be question number 1. Question number 3 should be question number 1. Then you should have the alternate options. But I'm assuming that because they had to change the sets and all, they moved it down. So people who had attempted this set may have been a little bit confused, but the answers were straightforward, simple. Yes, if I'm noticing this, people, 2 marks, 2 marks, and 2 marks, an easy 6 marks for you. I'm assuming no one would have made a mistake here. So 6 marks in your pocket. 6 marks in your pocket. We are moving on to question number 4. It says AMT liability is not attracted to who, people? They are saying individual AOP, no. BOI, HUF, not paying tax under default tax regime, no. If you are paying under default tax regime, only it is exempted. Then individual HUF, AOP, BOI, no. Individual HUF paying tax under default tax regime, answer is yes. This is the only person who can not opt for AMT provisions because AMT is not even attracted for these kind of people. Easy question, 1 mark here. 1 mark here. You've already scored 7 people. Great job. Next, Raju earned 25,000 rupees from lottery, 10,000 rupees from betting, 50,000 rupees from online games on internet, and has lost 5,000 rupees in card games during the financial year 23-24. People, for those who remember, we discussed when it comes to casual income and online winnings, any incomes will be taxable, any losses will be ignored. So I'm ignoring this loss. I am ignoring this loss, which means the incomes taxable will be 25,000, 10,000 and 50,000 rupees at the rate of 30%. Yes, let's check. 25,000 and 10,000, no. 25,000, 10,000, 5,000 minus 5,000, no. 25,000, 10,000 plus 5,000, yes. Adjustment of unexhausted basic exemption limit is also not permitted, perfectly right. 30% of 25 minus 5, no. Option becomes option number C, rule of elimination. 2 easy marks for you here. 2 easy marks for you here. Yes, case scenario number 2 looks like GST, so I am ignoring it. Case number 6, 7, 8 is all GST related. Case scenario number 3 also looks GST, therefore I am ignoring it. So 9, 10 gets ignored, 11 gets ignored, 12 is also talking about HSN code, which is GST, so therefore ignored. 13 talks about GST, therefore ignored. Case scenario number 4, people. I'm assuming this is the one question which people have been telling me that they didn't understand much because weird names are coming. Let's look at this carefully. It says, Mr. Anand is a traditional farmer who has inherited 35 acres of rural agricultural land, which was around 20 kilometers from the nearest town. People, we've already discussed in the classes, if it goes beyond 8 kilometers, it becomes a rural agricultural land and therefore is liable as agricultural income. He is cultivating 15 acres of land and paddy, which is directly taken by rice traders. Great. Directly taken by rice traders. Therefore, whatever you get from here will become agri income. Another 10 acres of land is used for growing sugarcane, and as per practice, sugarcane is purchased by the sugar mills nearby for villages, which were payments received by NEFT. People, sugarcane grown and directly sold off. Again, this also becomes agricultural income. This also becomes agricultural income. Remaining area is cultivated for mulberry leaves, and the part of mulberry leaves are used for being fed to silkworms and obtaining silk cocoons and selling these silk cocoons in the market. People, I think this is where most of the people got confused. They looked at the word called mulberry leaves and came and said this does not look agricultural related activities and therefore treated it as business income. People, it's not always important that your faculty will come and tell you that yes, every item is an agriculture or not an agriculture. We can't print out a list and give you what are the items which are agriculture. Sometimes you have to use your head carefully. Looking at this item itself, people, one thing comes and says that first things, they are growing some mulberry leaves. Second thing, the sale mulberry leaves are being fed to silkworms and obtaining silk cocoons and selling these silk cocoons in the market, which means they're technically talking about a case where first case like you're directly selling it, and second case like talking about composite income. People, if everything had to be business income, I say I would not have taken the efforts to come and tell you what is composite and what is not composite. Yes, the whole intention behind coming and telling you that some is being directly sold off and some is being sold off as a composite income is itself an indication that yes, this is an agricultural activity. This is an agricultural activity. This itself would have been a hint for you in your exams, people. If you have thought about this as an agricultural activity, great job, you have done a good job. For those who did not think through it, maybe you did not read the question properly. That is the only thing which I can tell you. Yes, other than that, people, so what has happened, you have done some mulberry leaves direct sales, therefore that is agricultural income. Part of mulberries are being used to fed for silkworms and obtaining silk cocoons and selling the silk cocoons in the market. This now becomes a composite income. This now becomes a composite income, which means it now has the element of both agricultural and business activities. Mr. Anand has got a net income of 4 lakh from paddy, agree. 3 lakh 50 from sale of sugarcane, agree. 75,000 by selling mulberry leaves alone, definitely agree. He carried out mulberry silk operations using the mulberry leaves worth 50,000. So this becomes your agri income, and selling the silk cocoons by spending 2 lakhs and 3 lakh 75,000 is the sale value. Yes, which means people, you have to do composite income split. We have discussed the process costing model, right? So what you'll do, you'll take 3 lakh 75,000 minus the 2 lakhs, which is your further processing cost, minus the 50,000 is the price at which the mulberry leaves were sold to the factory. Price at which the mulberry leaves were sold to the factory. So therefore it is 3 lakh 75,000 minus 2 lakh 50,000, which will give you 1 lakh 25,000 as business income. 1 lakh 25,000 as business income. This is what your business income will be, which means this is the only income which is your business income. Every other income will become an agricultural income. Keeping the thought in mind, people, let's look at the question. Somehow, no, weirdly, I also did not appreciate this question so much. For the first time, I'm noticing there is a question with options, but there are no questions. They have not even given a question to you, people, so you don't even know what to answer. You just have to use your head and understand out of the 4 options which makes more sense. So ideally, the understanding here would be to look at the 4 options and decide which one makes sense, which one should be ignored of. Yes, first, the sale of mulberry leaves 75,000 will not constitute agricultural income. 75,000 is a direct sale, so therefore this is wrong. The amount of 3,75,000 being sale of silk proceeds to silk cooperatives will constitute agricultural income. No. Net income from productions of silk cocoons is 1,75,000 exempt from tax, being agricultural. No. Net income from silk cocoons amounting to 1,25,000 will not be treated as agricultural income and will be taxed either as business income or IFRS. This is the right answer. We discussed only 1,25,000 will be your taxable income from business. Next, the entire amount of agricultural income of Anand will be 12 lakh rupees. Definitely not. Agricultural income will be 8 lakh 25, whereas gains from sale will be 1 lakh 25 will be agricultural income. Let's check, people. I have 4 lakhs, 3 lakh 50, which is 7 lakh 50. Then I have 75,000, which is 8 lakh 25. Yes, 7 lakh 50 plus 75,000 will give me how much? 7 lakh 50 plus 75,000 will give me 8 lakh 25 plus another 50,000 for your direct sale. So therefore 8 lakh 75,000 is the right answer. This is showing 8 lakh 25. So therefore this is wrong. Agricultural income will be 8 lakh 75, whereas non-agricultural income will be 1 lakh 25. This is the right answer. Since Mr. Anand mixes agricultural activities with non-agricultural activities, the entire receipts of 12 lakhs will be treated as non-agriculture. Definitely not. Answer is option number C. Answer is option number C. Paddy income of 4 lakhs is alone exempt from agricultural income? No. Sugarcane of 3 lakh 50 and paddy of 4 lakh will consider agricultural income? No. Sale of mulberry leaves amounting to 75,000, paddy income of 4 lakhs, sugarcane income of 3 lakh 50 will constitute agricultural income? No. Paddy income of 4 lakh, sugarcane of 3 lakh 50, sale of mulberry leaves of 1 lakh 25,000, which is nothing but 75,000 of direct sales plus 50,000 of composite income will be constituting agricultural income. Answer is D. Answer is D. This becomes your answer number D. And if I understand this correctly, then this is what your MCQs look like. Yes. So basically, people, if I look at MCQs now, technically the MCQs were very easy. At best, if I have to be conservative also, maybe you would have made a mistake on the mulberry leaf portion. Maybe you would have made mistakes on the mulberry leaf portion. The only downside to that, people, is that if you have done that, then you technically would have not got none of these answers right. So 6 marks would have lost here itself. But yes, I am assuming people would have used the head because everyone is very smart in nowadays, and therefore the whole 6 marks would have also come to you. So a 6 mark answer comes here also. Now, if I take that understanding, then you have 6 marks from your case study number 2. You have 2 marks from your here, 1 plus 7, so 8 and 9, then another 6, 15 marks, beautiful 15 marks. Direct tax, full 15 on 15 is what you could have easily scored, I think a very easy paper when it comes to direct tax. I have no idea on indirect tax, people, but I do understand from a lot of people that indirect tax was extremely difficult this time, and therefore maybe you would have had to have a pinch of salt on that. Yes, probably direct tax is what you would have scored your marks and you could have cleared your exam based on that, but that's what direct tax looks like. Let's move forward, people. Let's look into the descriptive questions and let's try to understand if the descriptive made any more sense. Yes. Now, ideally, I would never ask you people to start with the compulsory question in your exams, and I still don't encourage that. But since it's a paper review, I don't really have to jumble questions. Let me do from the top itself so that you and I can both run into this properly. Yes. Question number 1, people, it says Mr. Rohit is a resident individual, age 65 years. Very good. When the person is a 65 years of age, we know the person is a senior citizen. The person is a qualified medical practitioner, which means the person is entering into a professional activity. He is running his own clinic. Income and expenditure of Rohit is given to you for the year ended 31st March 2024 as under. 31st March 2024 as under. This is what the income and expenditure looks like. Before even I look into the table, people, let me understand what exactly is the requirement of the question. The requirement of the question says you're required to compute his net taxable income and net taxable liability for 24-25 if he has exercised the option of shifting out of default tax regime provided under 115 BAC. Beautiful. Which means you're going under alternate tax regime. All normal provisions will apply. All normal provisions will apply. Keeping the normal provisions in check, people, let's now look at the question and let's try to understand what changes we need to make. As we do it itself, people, I try to create a template so that we can start understanding what exactly should be added upon. Yes, so I'm creating a small template for everyone to answer off with me. So particulars with amounts column. I'm starting from the right side, people, like I always do in classes. We're looking at the first item which says consultation fees of 22 lakhs. Now, this is something which I also remember telling you in the last year revision classes also, people, and multiple times during mock exams also, that when you start, always look for your presumptive incomes. This person has a gross receipts less than 50 lakhs or 75 lakhs as the case may be, and therefore you had to check for presumptive taxation on this. You had to check for presumptive taxation on this. Ideally, if I'm looking at the net profit, it looks like your presumptive will be more and therefore you will not be impacted based on that. But yes, it carries 1 mark in your exams. It does carry 1 mark in your exams to write presumptive taxation. Tell me how many of you did presumptive taxation in the exam, people. Drop a message on the comment, drop me a like and tell me, yes, I've done presumptive taxation based on my revision videos. I'll be extremely happy to hear that. For those who did not do it despite this, yeah, something is wrong. Something is wrong. But yes, you should have done presumptive taxation on this, people. Let's keep that check in mind. Next, you have salary received from Care Hospital Private Limited, people. You have received a salary from another hospital. This is going to be taxable under the head salaries. This is going to be taxable under the head salary. So therefore, I should not be taxing it under the head PGBP. Maybe if I have to create the template very quickly, I'm going to start with the heading called as PGBP here. I'm going to start with the heading called as PGBP here. And I'm going to put in something called net profit. I'm going to put in something called net profit. My net profit starting point is given as 8,59,000. So I'm taking 8,59,000 here and I'm reducing my salary income of 1,80,000. I'm reducing my salary income of 1,80,000. Yes, I'm going to keep that check in mind, people. I'm doing it as we discuss about it. Next, rental income from house property is given as 78,000. This also moves to HP and therefore I'm removing this also from my PGBP computation. My 78,000 also gets removed. Yes, then I have dividend from foreign companies. Again, this also moves to my IFOS income. So I'm removing it down and I'm moving it to my IFOS I'm moving it to my IFOS. Yes, nothing there on the right side. I'm moving on to the left side. First question says salary to staff, no problem. Administrative expenses, no problem. Conveyance expenses, no problem. Power and fuel is not an issue. Interest on housing loan given to you. People, the house property has moved to HP and therefore the interest also should move to HP. So I'm disallowing the interest on loan. I'm disallowing the interest on loan. Therefore 1 lakh rupees gets added. 1 lakh rupees gets added. Interest on educational loan for son. People, when you take a loan for a son, that is technically a personal expense, not a business expense, and therefore it has to be taken up to your section 80E. Section 80E. Therefore I'm deleting this also off. Next, you have amount paid to scientific research approved and notified under section 35. I think this is something which we have discussed on multiple occasions, people. When it comes to scientific research, the only rule of thumb when it comes to alternate tax regime is everything is allowed. Everything is allowed except for land. Luckily, because this question says alternate tax regime, you have nothing to do with this adjustment. You can leave it off just like that. Had this been a default tax regime question, then you would have had to disallow this. Because under default tax regime you can't claim donations. Nothing else is given. The net profit is the answer. This is what your starting point is from the table. Next question says he's working as a part-time with Care Hospital Private Limited with the salaries details given to you. So the salary which is given on the top, no people, the 1,80,000, the breakup has been given to you here. It says the basic pay is 13,000, the transport allowance is 2,000, total becoming 15,000. Check quickly, is this the same number which is showing in the P&L? So 15,000 into 12 will give you 1,80,000, which is what is showing in the P&L. Yes, so perfect. So this is what the breakup of 1,80,000 has been given to you, people. You have 13,000 of basic pay and transport allowance of 2,000. Now, while I'm noticing this question paper, the one who has shared it across with me has mentioned this word as exempt. Answer is wrong. For those who understand this carefully, transport allowance is only exempt in case you are a handicapped person. Up to a maximum limit of 3,200 per month. A non-handicapped person has no exemptions with regards to transport allowance. This amount is fully taxable. This would have not been exempt. You should have taxed the whole thing. So this person who sent me the question paper has unfortunately lost marks on it. But if you have not lost marks, then great. Wonderful job for you people. I am now preparing my salary statement. In my salary statement, I am coming and saying my basic pay is fully taxable. My transport allowance is fully taxable. Total of this is 1,80,000. Ideally, I should have given a standard deduction, but let's wait and check if the question has any other information. I'm just putting it out right now. Yes. Next, further, during the previous year 23-24, his son has undergone a medical treatment in Care Hospital Private Limited free of cost. Hospital would have charged a sum of 1 lakh rupees for similar treatment to unrelated parties. Medical treatment facilities given to any family member of the assessee will be exempt from tax for 4 conditions. It is done in employer's own hospital, it is done in government hospital, it is done for COVID related diseases, or it is done for an approved disease. This is an employer's own hospital, so therefore this is fully exempt. It is not taxable. People, 1 mark given to you if you have written the note. 1 mark given to you for writing the note. If you have just ignored this element, then no marks for you. While the answer may be right, but no notes carries no marks. You have to mention a note which says medical treatments are exempt from tax. Next, he owns a residential house, people. The ground floor of the house is 50% self-occupied by him, while the first floor of 50% has been rented out from 1st October 2023. October 2023, which means October, November, December, January, February, March. 6 months is what this property was rented out for. It was not rented out for more than that. The reconstruction of the entire house was started on 1st April 2023 and was completed on 30th September 2023. Now they are trying to confuse you. I'm not sure how many of you notice this, people, but this is a mistake which you would have made. You would have assumed that from 1st April to 30th September was a pre-construction interest. But it is not. Pre-construction interest guidelines come and say pre-construction period will stop the preceding previous year in which the house was completed. Since the house was completed in the same year and the loan was taken in the same year, all interest pertaining to the current year will be called as current year interest, and there will be no pre-construction interest. This was just to confuse you. The monthly rent is given as 10,000 rupees. This is your income from house property. The tenant also pays 3,000 per month as power backup charges. Okay. So now I have been receiving 13,000 rupees for rent. So 13,000 rupees I have received it for 6 months, which becomes 78,000. Let's check on the top. I have received a rent of 78,000. Yes, this is what is showing in your P&L also. So 78 gets removed now, people, and I'm moving back to HP. In HP, I have been given an annual rent of how much, people? I have been given an annual rent of 13,000 rupees. Correct? Not correct? Absolutely wrong. Absolutely wrong. For those who remember the provisions of HP people, the provisions of HP come and clarify that when it comes to HP, it is important that only the rent pertaining to the house is taxable under the head HP. Power backup charges are not forming part of HP because it is a composite rent. To the extent the rent is separable, this will become taxable under IFOS. This will become taxable under IFOS. So if you have shown the whole 13,000 under HP, this is wrong. This is wrong. Only 10,000 can be shown under HP, people. Only 10,000 can be shown under HP. Tell me how many of you made this right. Put a comment and tell me, yes, I have made this right, people. I have shown power and fuel under a separate IFOS head. If you have not done that, I'm sorry, you're losing marks here. You're losing marks here. Only 1,20,000 will be taxable under the head HP. The balance will go under IFOS. The balance will go under IFOS. 36,000 will now get reported under IFOS. Yes. Next, he has taken a housing loan of 12 lakhs on 1st April 2023. The interest on housing loan for the period April to September is 60,000, whereas for the period October to March is 40,000 rupees. Is 40,000 rupees. Is this relevant? Answer is no. Answer is no. The whole interest is going to be called as a current year interest. Check, no, 60 plus 40 is 1 lakh. My P&L also has 1 lakh. Yes. So therefore, people, what is going to happen? You're going to split this whole 1 lakh. You're going to split this whole 1 lakh into two components. One is 50% goes for SOP property and 50% goes for LOP property. Yes, which means 50,000 can be claimed as deduction under SOP rules and 50,000 can be claimed as deduction under LOP rules. People, if I'm checking the conditions, all conditions have been satisfied. The loan is taken after 1999. I have taken it for the purpose of construction. The house is also completed within 5 years. So therefore, you're eligible for the whole SOP interest. You're also eligible for the whole LOP interest because there are no restrictions on this. Luckily, the question says it's an alternate tax regime. Therefore, you have no challenges here. You have no challenges here. You can claim both the deductions. Yes. Any other adjustments to make? I don't know. Let's check if the template is completed. During the year, he is also paid municipal taxes for the financial year 22-23 and 23-24 of 6,000 and 4,000 rupees. 6,000 and 4,000 rupees. People, they have said you have paid 10,000 rupees, not pertaining to current year, but pertaining to past years. For those who remember HP rules come and clarify. Any taxes paid in the current year can be claimed as deduction on actual payment basis, regardless of what year it pertains to. Regardless of what year it pertains to. Therefore, the whole 10,000 can be claimed as deduction. Yes or no? Yes or no? No, it cannot be claimed as deduction, people, because the whole 10,000 would have been paid for both SOP and LOP premises. For both SOP and LOP premises. Therefore, HP rules have to be split accordingly. People, I am doing SOP separately, I am doing LOP separately. Under SOP, I have received no rent, so I am ignoring the rent. I have received a rent of how much, people? I have received 10,000 into 12. 10,000 into 6. Correct? No, I have received how much? I have received 10,000 is the rent. Yeah, your 10,000 into 6 is what I've received, people. So 60,000 is the rent with pertaining to LOP. Then I have municipal taxes. 10,000 is what I've paid for both SOP and LOP. I can only claim the LOP portion, which is 5,000 rupees. Therefore, my income from house property becomes 55,000. Minus comes your 30% standard deduction. 55,000 kamala 30% will give me 16,500. 16,500. Then I have interest on loan, people. Interest on loan, like we discussed right now, you have a total interest on loan of 1 lakh rupees, in which 50,000 goes to SOP and 50,000 goes to LOP. So 50,000 is taken in SOP, 50,000 is taken in LOP. Total difference will be minus 50,000 in SOP, and interest here becomes negative here also. So 55,000 minus 50,000 minus 16,500 will give you negative 11,500. Negative 11,500. So my HP will report a negative number of 11,500 rupees for you to set off against other heads. For you to set off against other heads, because you are in alternate tax regime. Because you are in alternate tax regime, perfectly allowed to claim. Yes, keep that thought in mind. I would assume that some students would have made the mistake of taking the power backing charges in your HP. Problem there, people, is that if you have done that, then you have given 30% extra deduction on the power backup charges also. On the power backup charges also, which you should have not done. Which you should have not done. So you have lost marks there. Yes. No, moving on forward. Other information is given to you. Payment of salary of 25,000 per month is given to sister-in-law of Mr. Rohit, who is in charge of accounts and receivables department. However, in comparison of similar work profile, the reasonable salary is 20,000 per month. For those who would have jumped up on this and came and said it is 48.2 and would have come and disallowed the balance 5,000 rupees, you are absolutely wrong. You are absolutely wrong. This is a non-related party, people. We already discussed in your PGBP chapter. When it comes to your related party, it is only the left side of my family. It is only the left side of my family, which means any in-laws are not covered. Any in-laws are not covered. Giving unreasonable things to in-laws is perfectly legal in income tax and will not be objected to, and therefore no adjustment will be in relation to this expense. No adjustment will be in relation to this expense. This was technically supposed to be ignored with the note. This was supposed to be ignored with the note. If you have done that, then great, you have understood the chapter properly. Next, conveyance expenses includes 12,000 rupees, which is incurred from conveyance from house to care hospital and vice versa in relation to his employment. People, now they've come and clarified that the conveyance expenses also has some salary related conveyance expenses. So the first thing you need to do is to disallow it from PGBP. So under PGBP, you are going to disallow your conveyance expenses of 12,000 rupees. And coming to salaries, people, what will you do? You will ignore this expense of completely. People, conveyance allowance received by you is fully exempt from tax. Conveyance allowance received by you is fully exempt from tax. So therefore, it is not taxable. Yes, therefore it is not taxable. You have not received any conveyance in relation to that also, therefore it becomes fully exempt. Next, power and fuel expenses include a sum of 6,000 rupees incurred for generation of power fuel for providing backup to the tenant. Now notice carefully, people, it says power and fuel also has some personal expenses which pertains to the tenant expenses which you incurred. So this also is not relating to business. So therefore 6,000 rupees has to be deleted off, and I'm noticing there is no per month logic here. So therefore I'm just disallowing the power and fuel of 6,000 rupees. But people, because you have incurred this expense in relation to your receiving of rent, you can actually claim it as deduction. So 6,000 rupees can be fully claimed as deduction with no restriction on 30% guidelines, people, because this is under IFOS. If you have made a mistake of classifying the head, people, you will end up giving 30% and ignoring the 6,000 rupees. But that is not the case here. You would have lost marks here. Yes. So your power backup charges actually are 30,000 rupees fully taxable. Moving on forward. What else do you have? You have an administrative expenses including a sum of 10,000 rupees paid as municipal taxes for his house. So which means the municipal taxes which you pay are actually disallowed and part of P&L, people. Therefore it has to be removed off. So municipal taxes is 10,000 rupees. Now here is the question which I have. Weirdly, no, people, the question says it shows 10,000 rupees paid for municipal taxes for his house, but it does not clarify which year does it pertain to. Logically, if you notice this part, it says 4,000 rupees and 6,000 rupees is paid in the current year pertaining to previous years. So one can make a genuine assumption that the 10,000 rupees showing in this information is the same 10,000 rupees being reported here, which means no other adjustments will take place. Option number 2 is where you can come and clarify. Maybe this 10,000 rupees shown separately is an extra payment made. And therefore an additional 5,000 rupees pertaining to the LOP could have been claimed as deduction. Ideally, nothing is given. You can make suitable assumptions to it, people. But logically, if you come and ask me, I would assume the first one. The 10,000 rupees showing in the additional information is the same 10,000 rupees reported here, which means a meager disallowance will happen in PGBP and no adjustment will happen in HP, because we've already found out the HP 10,000 rupees ka rule. I hope you all understand what I'm doing. Yes, if you have changed the model and you have reduced another 5,000 rupees pertaining to the property, then yes, you have to put a note against it in order to get it right. Next, clinic equipments details are given to you, people. Opening WDV of the equipments are given as 1 lakh rupees. You are eligible for a depreciation at the rate of 15% on this. You have fresh purchases made on 20th August for 25,000 rupees, which was paid in cash. Yes, people, now I have a problem. Provisions of section 43 come and clarify that when you make an asset purchase in cash, the asset gets ignored. So which means you're not getting depreciation on this. You're only getting depreciation on your opening WDV. So therefore, I'm going to go forward and remove my depreciation as well. So I have minus depreciation of 15,000 rupees. Next, what else do you have? You have been informed that there is a tuition fees payment of 40,000 rupees for his granddaughter, which is debited to his capital account. Luckily, people, because it is debited to capital account, it is not part of P&L. So I don't have to make any adjustments related to this. But yes, it's a tuition fees payment for granddaughter. You will ignore this for the purpose of your ATC. You will ignore this for the purpose of your ATC, people. ATC comes and clarifies that you can only claim tuition fees for your children subject to 2. For your children subject to 2. Because this is granddaughter, it is not eligible for deduction. It is not eligible for deduction. In simple words, you will ignore the information. You will ignore the information. Next, he has availed a loan of 8 lakh rupees from bank for higher education of his son, repaid principal of 50,000 and interest of 26,000 during previous year 23-24. People, if I notice, I remember this is there in the table also. Yes, it is there in the table also, people. Therefore, this is an eligible deduction. This will be under 80E. This will be under section 80E. You will get a deduction of 26,000 from your gross total income. From your gross total income, you can claim that. The balance 50,000 will get ignored, people. When it comes to educational loan, the principal amount cannot be claimed as deduction, only the interest amount can be claimed as deduction. This is your final question and they're asking you for tax liability. Yes, let's see if we have missed out something and let's try to filter it out. Yes, people, first things, I have removed my salaries and I've reported it on the top. Salaries has been reported. Yes, perfectly fine. I have HP, which I have also reported on the right side. Yes, I have dividends of 10,000 rupees, which I am yet to report in my OS. So I am reporting 10,000 rupees of dividends in my OS. My interest of 1 lakh rupees pertaining to housing loan has been taken. Interest of educational loan has also been taken. Conveyance has been taken. Power and fuel has been taken. Municipal tax has also been taken. Depreciation has been removed. All other adjustments are taken care of, people. Couple of things which you have probably missed out is that on your salaries, you have to give a 50,000 ka standard deduction. So let's give 50,000 ka standard deduction first. I am removing a 50,000 ka standard deduction. I'm removing a 50,000 ka standard deduction. Therefore, my salary becomes 1,30,000. My salary becomes 1,30,000. I have HP loss of how much is this? 61,500, is it? Yes, I have a HP loss of 61,500 rupees. Let me take what my PGBP looks like. Help me out, people. You can also compute it along with me here. Yes, what is my HP income? I have 8,59,000 minus 1,80,000 minus 78,000 minus 10,000 plus 1 lakh plus 26,000. Let's start over again. Calculators, I tell you. 1,80,000 minus 78,000 minus 10,000 plus 1 lakh plus 26,000 plus 12,000 plus 6,000 plus 10,000 minus 15,000. Your answer should be 7,30,000. Your answer should be 7,30,000. People, in case I've made some calculator errors and you have got a different number, might as well consider that. It's okay. Yes, at the end of the day, the intention is to get the logics right. So 40,000 gets taxed here in IFOS, which means if I take my total income right now, people, 7,30,000 plus 1,30,000 minus 61,500. I am assuming that I am setting off my HP loss against my salary income. HP loss against my salary income. I am getting a number of 7 lakh. Oh, sorry. So 7,30,000 plus 40,000 plus 1,30,000 minus 61,500 will give you 8,38,500. So my gross total income is 8,38,500, in which I'm only going to remove my ATE, people. Tuition fees has been already deleted off. You cannot claim tuition fees, so therefore that is taken away. You have 8,12,500 rupees as your total income. You have 8,12,500 rupees as your total income. This is what the final answer is. This is what the final answer is. Apart from that, people, the question is asking for tax payable. I think that's fairly easy for you. Please understand that the question came and clarified that yes, the person was a senior citizen. The person was a senior citizen, and therefore you have to do for the first 3 lakh rupees. Answer is 0. Then 3 lakh rupees to 5 lakh rupees, it will be taxed at the rate of 10,000 rupees. Then you have 5 lakh rupees to 8,12,500 at the rate of 20%. At the rate of 20%. So you have 3,12,500 at the rate of 20%, which will give you 62,500. Which will give you 62,500. Therefore, your total tax is 72,500 plus cess on this. Plus cess on this will give you final answer of 75,400. 75,400. This is your final tax payable. This is your final tax payable. Now, ideally, people, if I look at the question, couple of places where I'm receiving incomes like salary. Ideally, someone should have deducted TDS on this. But since there is no information available, I'm not assuming the TDS was deduction happened. Second, rental income from property people. It does not look like rent is more than 50,000 per month, so therefore they would have not deducted TDS on that also. And finally, dividend from foreign companies. You have a limit, and therefore TDS could be taken place. But the thing is, the question only says dividend from foreign companies. It does not say dividend received from foreign companies, and therefore my assumption is TDS has not taken place. Therefore I'm not doing TDS on that also. Alternatively, people, you can make an assumption that TDS was done, and therefore 1,000 rupees will be removed. Final tax payable will reduce to that extent. Yes, couple of things which probably are still missing in the question and you have not answered is, people, that your PGVP income has come as 7,30,000. My presumptive taxation has to be checked. 22 lakhs into 50% will give me 11 lakhs. See, you are very lucky here. Because your presumptive is showing higher. And therefore, even if you have failed to do presumptive, the final answer will not change based on that. But yes, presumptive will carry an additional 1 mark. So if you have shown presumptive and you have told that you will not offer presumptive, then yes, you score that 1 mark for you. If you have not done that, unfortunately, you will lose marks there. But yes, people, if you come and ask me, the question looks simple, but it has a lot of errors. Reporting something in additional information, reporting something somewhere else. You being careful that the numbers are matching to the table is something which extremely is critical. Yes, and to that extent, I feel people may have not scored the complete 15 marks on this. You may have made at least one small mistake. If nothing, you would have made a mistake on this power backup charges, definitely. Yes, this power backup charges is what I feel you would have made a mistake on. If you have not made a mistake and I stand corrected, I'm very happy you have done that. Yes, couple of other mistakes which I probably assume you would have made, people, is to give an ATC here. If you have given an ATC for your granddaughter, unfortunately you're not getting marks for that. Yes, and then maybe to take your transport allowance like this kid had done. If the transport allowance has been treated as exempt because you offset it against your conveyance, I'm sorry, you would have lost marks there. That is not permitted for you. So you cannot take your conveyance expenses. What else? I fairly think everything else would have been in your hand. You should have not made mistakes on anything else. But yeah, I think this itself would have lost you around 5 to 6 marks. Yes, if you have gone these much wrong, people, then technically your income is definitely going to be wrong, and from your income, definitely tax payable is also going to be wrong. But if you have been smart enough to use 3 lakh rupees for your tax payable, maybe you would have saved that extra 1 mark also. But let's assume a normal loss of 5 marks to 6 marks. Maybe if you have attempted this question, I would assume 9 marks, or okay, just to be nice, 8 marks. Just to be nice, 8 marks is what you would have got. 7 marks you would have lost, and this is what I'm making a normal loss assumption. Moving on forward, people. Mr. Paras has a proprietary business since previous year 15-16. He has started for the business on 1 April 2023 by way of slum sale. Very good. Yes, people, I do remember when I did last minute revisions, I told you 2 things which can be tested in capital gains. Either the immobile property is coming or the slum sale is coming. If slum sale comes, pat yourself on the back because you're going to get good marks in this. Yes, it says slum sale has been given. Consideration is 40 lakh rupees. Fair market value is given as 35 lakh rupees. People, provisions of slum sale come and clarify. You will take the actual consideration or fair market value, whichever is higher. My actual consideration is 40 lakhs. My fair market value is 35 lakhs. Government is extremely happy with you, and therefore 40 lakhs becomes your full value of consideration. Yes, incurred an expense of 1,50,000 to deal with this transfer expenses. So therefore you have transfer expenses of 1.5 lakhs, giving you a net consideration of 38.5 lakhs. 38.5 lakhs. Moving on forward, now they've given you the balance sheet and they want you to give some capital gains or loss. Yes, people, first of all, let's understand whether it is long term or short term. The question says it is 15-16, therefore I know this is going to be a long term capital gains. Now let's look at the assets and liabilities, people, to figure out which one we're transferring, which one we're not transferring. You're transferring building, debtors, machinery, other assets. You are not going to transfer your own capital. You're going to transfer bank loan, unsecured loan, and creditors. This is what you're going to do. Let's check what and all do we have to make adjustments relating to. Question says that bank loan includes 2 lakh rupees for personal purposes. People, if you have taken a bank loan for personal purpose, why exactly would you transfer it to someone else? No one else is going to pay this on your behalf. Therefore 5 lakhs gets reduced to 3 lakhs. This is what you're going to transfer. Yes, then machinery costing 50,000 has been allowed as deduction under section 35AD. People, in this 5 lakh rupees, already one asset you have already claimed full deduction. So therefore, to the extent of 50,000 rupees, the asset is not getting transferred. Even if it gets transferred, the WDV value will be 0. Yes, other assets include self-generated goodwill of 60,000 rupees. So therefore, out of the 5 lakhs, 50,000 gets ignored. Balance 4 lakh 50 remains as it is. Balance 4 lakh 50 remains as it is. In the other assets, people, they're now coming and clarifying there is a goodwill of 60,000 rupees, which you are going to ignore because it's self-generated goodwill. The balance 3 lakh rupees is what you can claim. The balance 3 lakh rupees is what you can claim fully as a deduction. As a deduction. Yes, unsecured loans include 1 lakh rupees for amount payable for the purchase of ornaments for his wife. People, personal loan taken, I don't know why it's showing in the books first of all, but okay, it doesn't matter. ICA questions, we don't object to it. People, again, you are not going to transfer your personal loan to anyone else. No one else is going to pay your personal loan. Therefore, 1 lakh 50 is what you're going to transfer. 1 lakh 50 is what you're going to transfer, and that's all the question. Which means, people, what and all am I transferring? I'm transferring a complete building of 18 lakhs. I'm transferring a debtors worth 5 lakhs. I'm transferring machinery worth 4 lakh 50. I'm transferring other assets worth 3 lakhs. I'm transferring other assets worth 3 lakhs. My total asset transfer is 18 plus 5, 23, 27, 30 lakh 50,000. 30 lakh 50,000. Out of my loans, people, I'm transferring loans only to the extent of 3 lakh, 1 lakh 50 and 4 lakh 10,000. 4 lakh 10,000. So 4 lakh 50,000 plus 4 lakh 10,000 is the liabilities which I'm transferring, which is 8 lakh 60,000. 8 lakh 60,000. My net difference, people, is 21 lakh 90,000. My net difference is 21 lakh 90,000. So 21.90 is my net worth, or as we call it, the cost of acquisition. This is what I am transferring off. So if I take 21 lakh 90,000 and take 38 lakh 50,000 out of it, my net is 16 lakh 60,000 of capital gains. This is my long-term capital gains which is being taxed. This is my long-term capital gains which is being taxed. 6 marks for this. Oh my god. Yes, 6 mark question, people. Easy 6 marks everyone should have got. If anyone has made a mistake on it, horrible this would be. This is the most easiest question I've seen. The only thing which you have seen different from what your normal slum sale questions is, now they have included personal assets and personal expenses. Ignoring that, people, technically this is the most easiest question I could see. 6 marks for this with the notes and everything. Easily scoreable. Easily scoreable. You should have got that 6 marks. Oh, question number B. Now I understand why it's easy, because the second part of the question is TDS related question. Okay. Mr. Ganesh, whose professional receipts for the year ended 31st March 23 are given to you as 1.25 crores, which means the person had more than 150 lakhs for his professional receipts and is liable to do TDS on all transactions. Has made a payment to Mr. Rajesh, chartered accountant, during previous year 23-24, who has multi-phased activities. Okay, one person you're making payments. Exam and TDS provisions are applicable for the following payments made by Ganesh to Mr. Rajesh. So there is a person making a payment to another person. You need to check whether TDS will apply or not. Professional fees for consultation 32,450. People, section is 194J. Section is 194J, but if you notice, it says 32,450 is after including a GST of 18%. So for those who understand, TDS will not happen on GST elements, so therefore you have to remove GST, people, from this. 32,450 into 100 divided by 118 will give you 27,500 rupees. 27,500 rupees. For those who remember section 194J, fees for professional services, come and clarify. Payment should not exceed 30,000 rupees for no TDS to happen. Since payment is 27,500, no TDS will apply on this. No TDS will apply on this. Next, royalty payment for use of computer software by various clients of Mr. Rajesh, 2,50,000. People making royalty payments is liable for TDS because it is a 194J case. Limit again is 30,000 rupees. It's already crossed, and therefore you have to do TDS at the rate of 10% on this. 25,000 rupees should have been deducted as TDS. Second, fees for technical services relating to business of Mr. Ganesh is 20,000 rupees. People, 194J provisions come and clarify that 30,000 limit is individual limits for each nature of payment. So 30,000 separate for professional, 30,000 separate for technical. Since technical is 20,000 rupees, this also does not get liable for TDS. This also does not get liable for TDS. And finally, fees for teaching accountancy to his son. People, this is a personal payment. This is a personal payment and will not fall into 194J. It will fall into 194M. It will fall into 194M, but 194M has a limit of 50 lakh rupees, and therefore no TDS will happen in this also. No TDS will happen in this also. In summary, people, out of the 4 items, TDS will only happen on point number 2, which is 25,000. Every other item is not liable for TDS. Every other item is not liable for TDS. Hypothetically, assuming you don't even know the chapter, if you have put 10% also, I'm assuming 2 marks would come in this. I'm assuming 2 marks would come in this. You should have got at least 2 marks in this. Nothing in this, people. Yes. Question number 3, people. We are moving on forward. Question number 3 says, it says, what is the meaning of micro and small enterprise under section 43B of income tax? Theoretical question. Okay. People, theoretical question I'm not discussing. You should have answered it from your end. Yes. Following question number 2. It says, Prem has the following assets on 1st April 2023. A machinery costing 4 lakh rupees which was used for scientific research related to business and deduction under 35 is allowed for 40,000 rupees. They're asking you to compute the depreciation allowed on each asset. People, first asset says 4 lakh rupees used for scientific research. If you have already used it for scientific research, oh, that's weird. It says machinery costing 4 lakhs which was used for scientific research related to business and deduction under section 35 was allowed 40,000. How come? That's weird. People, the question says machinery is costing 4 lakhs which was used for scientific research to business and deduction under section 35 was allowed 40,000 rupees. Why would someone allow only 40,000 rupees? You are eligible for the whole 100% deduction. You're eligible for the whole 100% deduction. Okay. Assuming the question is right, it looks like wrong, people. Definitely looks like wrong. Assuming the question is right, people, you have only 4 lakhs asset on which you have claimed 40,000 rupees as deduction, which means you have not claimed deduction on 3.6 lakh worth of asset. In that 3.6 lakh worth of asset, you can claim 15% deduction. You can claim 15% deduction. So therefore, this should be allowed as deduction to you. Yes, 3,60,000 into 15% is what you can claim. Therefore, 54,000 is what you should have claimed. Yes. Ideally, I would love to come and say that, boss, it's a machinery which has been used for scientific research, therefore full deduction would have been allowed, therefore the cost of the asset would be 0 and depreciation should also be 0. But when the question is saying that only 40,000 is allowed, that means the balance is not allowed. Yes, if the balance is not allowed, then you have to use normal depreciation on it, therefore that is what is eligible for you. Yes, although yes, people, I think this is a vague question. You should get step marks for it if at all something goes wrong. Next, a laptop received as gift from his friend costing 60,000 rupees purchased on 2022 by his friend. People, provisions of income tax come and clarify, when you receive a gift from a different person, the cost of the asset in the hands of the current owner will be cost to the previous owner minus depreciation which would have been claimed by you. Had you had the asset from day one. People, asset is purchased on 1st April 2022, which is 60,000 rupees. I am assuming that the friend would have claimed a depreciation on this for 22-23 at a rate of 40%. Therefore, 24,000 would have been removed as a deduction. 36,000 is what is the opening WDV on 1st April 23. They want you depreciation on 23-24. Therefore, 40% of this is the final answer. So 36,000 into 40% is what you will get. 14,400 will be the right answer. 14,400 will be the right answer. This is what you should have got. Yes, this is an easy question. I don't see challenges here. Next, a temporary wooden structure costing 70,000 is erected in December 2023, which is used for business purposes. People, temporary structures and all, we discussed the rate of depreciation is 40%, but because the asset is purchased on December 2023, which is after 2nd October 2023, you are eligible only for half the depreciation, and therefore it is 70,000 into 20%, which will give you 14,000 rupees. I am assuming these two is what you would have got, right? This is kind of a weird thing. I don't know what will be happening for this. So if I have to wait this out, I would say maybe if you have not been reading theory, this would have been lost to you. You can ignore that 2 marks. You have, let's say it's 3 marks each, is it? Okay, let's probably assume that it's 3 marks each, which means 3 marks lost here. You would have got marks here for 2. I'm assuming the first one should be given marks to you, but in case they don't give it, hypothetically, I'm assuming 2 marks would have been received here. Point number B, people, comes and says, your Mr. X is 83 years, resident individual, giving the following particulars of his receipts. Installment given from bank under reverse mortgage arrangement. Very good. People, capital gains provisions, we have come and discussed. Reverse mortgage, whatever items are received is fully exempt from tax, therefore ignored. Interest on bank deposits is 2 lakhs. Interest on bank savings account is 2,45,000. They both are getting taxed under the head IFOS. You are eligible for a deduction of section 80 TTB because the person is 83 years. So you can reduce 50,000 rupees from here. Yes. Next, pension received from central government, people, is eligible for a standard deduction of 50,000 rupees because the word used is received. Pension from a central government means there is no standard deduction done on this, and therefore you are eligible for standard deduction. STCG arising on sale of dining tables and chairs. Okay, people, this I think is subject to assumptions. It says dining tables and chairs, and therefore I would assume this is from your personal assets, and if it's a personal movable effect, then this is exempt from tax. This is exempt from tax. It is not taxable because it's a personal movable effect. Although yes, people, if that was the case, then why would they have to use the word STCG? Yes, using the word STCG itself means that they have some other assumption. So I would say this is taxable. But I mean, yeah, assuming that the ICA has made a mistake, this becomes zero. This becomes zero. Finally, income from dairy farming of his rural agricultural land, people, is an agricultural income. No, it's not. It says income from dairy farming. It's fully taxable as a income. People. This is not exempt from tax. It looks like someone would have made a mistake here. I'm assuming people would have made a mistake here and would have called it agricultural income. This is wrong. This is not an agricultural income, which means if I take this properly, people, what is my incomes now? I have a salary income of 4 lakh rupees. I have my probably business income is what I'm going to call it, of 50,000 rupees, which is my dairy farming income. Yes, then you have your IFOS income, which is of 2,45,000. Yes, if I take this total, it is 4,50,000 plus 2,45,000, which is 6,95,000. Minus your 80 TTB, you will get 50,000 ka deduction, which becomes 6,45,000. This is your total income, people, on which you now need to compute tax. Since the person is 83 years, you are eligible for the first 5 lakhs as a deduction. The balance 1,45,000 becomes taxable at the rate of 20%, which is 29,000. Adding a cess on this, you get 30,160. This is what your final answer should look like. Because the person has opted out of default tax regime. Yes. People, this looks like a tricky question if you honestly come and ask me. Yes, questions like this can really go challenging. STCG, this one. If I then come to understanding, people, I think question number 3 and question number 3B both have been complicated. So if you ask me, I would assume that you should have left question number 3 for your exam. Yes, TDS may have been difficult, but at least you would have scored an extra 2 marks from it. Slum sale definitely you would have got. So out of 10 marks, 8 you would have got there. Versav is this, I don't know how much you would have scored on this. I can hardly assume 2 on this also. Yes, I can't assume more than that, because if this is wrong, then technically your income is wrong, and if your income is wrong, your tax is wrong. STCG can also be a weird assumption, so I don't know how people would have answered this one also. Yes, so maybe I will assume only 2 marks on this. I'm not assuming more than that. Okay, question number 4, people. I think from here things become a little more simpler. Now you're looking back to your normal things, your clubbing and set-offs. Yes, question says, Mr. Rakesh is furnishing the following information for you for the year ended 31st March 2024. The question has: compute the total income of Rakesh for the assessment year 24-25. Exercise the option of shifting out of default regime. Hey, this is weird. It looks like in the whole paper there is no default regime itself. Let me check question number 4B. Yeah. Oh, weird. People, there has been no default regime question in this. They have not even asked a single question on default regime. Looks like they've already exhausted all their scope in September, and so therefore wanted to test on alternate regime. Like I said, no, the template of the question paper is a little weird. They have not been asking standard questions or the ones which were expected, at least to start with. Shifting out of default regime has been asked, is it? Okay, yeah, I think to that extent, I guess you were lucky. Yes, let's look at the question, people. It says short-term capital gains is 2,80,000, therefore fully taxable. Loss from speculative business can only be set off against income from speculative business. I am not noticing any income from speculative business, therefore this gets carried forward. I'm carry forwarding 1,20,000 for your speculative business. I have a long-term capital gains on sale of land of 60,000 rupees, which is going to be fully taxable, but there is a long-term capital loss on sale of shares. STT is not paid, so therefore you can do a cross adjustment. This becomes not taxable now. 1,40,000 remains here. For those who understand, long-term capital loss can only be set off against long-term capital gains. You cannot set it off against short-term capital gains also. Therefore, short-term capital gains now becomes fully taxable. The 1,40,000 of long-term capital loss which you have will unfortunately get carried forward for a period of 8 years. Next, income from business of textile after allowing current year depreciation is given as 1 lakh. Income from salary is given as 2 lakhs. Loss from let out property is given as 80,000. People, I would love to set this off against my salary income. Therefore, my loss from HP gets adjusted off. 2 lakhs get adjusted, and therefore taxable salary income becomes 1,20,000. Income from business is 1 lakh. I noticed somewhere on the bottom it says carry forward loss from business of textile is 1,20,000. This being the 8th year of the loss. People, you have past year losses of business. You can set off against business incomes for a period of 8 years. This is your final year, so whatever you set off in the current year will be allowed. So out of 1,20,000 people, I am able to adjust 1 lakh. Therefore, this becomes fully zero. This becomes fully 0. No further loss to be carried forward. The balance 20,000 gets lapsed. The balance 20,000 gets lapsed because you're no more eligible for it. Yes, share of loss from a firm becomes fully exempt, people. Profits from the firm are exempt, share of loss is also exempt. This is what I see as my final incomes. Yes, which means my final income will be 4 lakhs. My final income will be 4 lakhs. If you notice, this is your slab rate income. This is also your slab rate income, which means good enough. You can claim chapter 6A on this. If there is any special incomes, then you would have not claimed your chapter 6A, but there is no special incomes in my attention. Therefore, nothing to be worried about. Your 80 PPF is given as 80C, so therefore you can claim your PPF 80C. You have medical insurance premium self paid by check 24,000. This is your 80D, fully eligible. Then you have preventive health checkup fees for wife paid by check 5,000 rupees. Maybe people would have made a mistake. People, you're only eligible for 1,000 rupees. You're only eligible for 1,000 rupees. Can someone tell me why? Can someone tell me why? People, this two form part of the same bucket. This two form part of the same bucket, and the bucket is only eligible for 25,000 rupees overall. The bucket is only eligible for 25,000 rupees overall. So you could have only claimed 25,000 rupees in this. Claiming extra 5,000 rupees because it is within the limits may have been a mistake you could have made. You should have not made that mistake. You should have not made that mistake. Yes. So 4 lakh rupees minus 24,000 minus 21,000 minus 1,000 would have given you 3,54,000. Would have given you 3,54,000, which is what is your current year income. They wanted a total income and the losses which you can carry forward. You can only carry forward a loss of speculative business for a period of 4 years. You can carry forward long-term capital loss for a period of 8 years. Your business loss of 20,000 gets fully lapsed off. Your share of loss from a partnership firm is not considered itself. This is what your final answer will look like. How much mark question? 6 mark question, people. Assuming this is the only mistake you would have made, I am giving you 5. I'm giving you 5. If you have not made that mistake, you are eligible for 6. Take 6, put a star on it. Put a star on it. You have done a great job. Yes. This leaves me with point number B, people, which says, who are all the persons required to mandatory file the return of loss? This is a theory question which we have discussed. I put it in LDR also, people. Who and all should be making sure that return filing is an important chapter. Who and all should file a return of loss? People who are having any kind of PGBP loss, any kind of CG loss, any kind of PGBP loss and CG loss. People who are not required to file a return is the people who are having HP loss or having unabsorbed depreciations. Basically, any person having your specified business loss, speculative business loss, normal business loss, long-term capital loss, short-term capital loss, or loss from owning and maintaining horse races, all those people will have to mandatory file the returns. People who are having HP loss or unabsorbed depreciation need not file the returns of losses. I think this is an easy 2 mark question you should have able to answer. Consequences of not filing return of losses, people. If you are not filing the return of losses in time, 2 things will happen. One is that there will be no carry forward of losses. There will be no carry forward of losses, but you are eligible for set-offs in the current year. You are eligible for set off in the current year. Maybe I have a wild guess, but I'm assuming that people would have not noticed this word. People would have not noticed word and would have written the other things. You are eligible for 234A interest. You have a late filing fee of 5,000 rupees. You are eligible for default tax regime and all those things. That does not happen, people. That does not happen. This is a return of loss. They're asking what happens specifically on return of loss, people. You do not talk about chapter 6As and everything. You do not do that. You only talk from a loss perspective. From a loss perspective, you cannot carry forward the loss, but you can allow the set off. I don't know if at all you want to carry an extra mark. You can probably come and say you will have to mandatory force yourself into default tax regime. You'll have to mandatory force yourself into default tax regime, and therefore any losses like HP loss of future cannot be carried forward. That is probably one adjustment which you can make. 2 marks here on the assumption that you have noticed the word losses. If you have not noticed the word losses, expect nothing out of this. Yes. In case point number B was issue, you can probably answer this one. This one looks easier. It says, what is a belated return under section 139(4) and when should it be filed? Belated returns are basically those returns which are filed post the due date of 31st July, 31st October. Returns can be filed up to 31st December of the assessment year. 31st December of the assessment year is what the provision is. Easy 2 marks. easy, 2 marks. Examine non-applicability of updated return. People, from an inter syllabus, I already told you when should you not be filing an updated return. First is if you are not having any tax payable. Second is if you are not reporting any incomes beyond losses. You can only file an updated return when the loss converts into income and you get a tax payable. If there is no incomes happening, then there is no updated return. These are the only 2 things which are there for an inter syllabus. People, you don't have to worry anything more than this, which means I would assume that you should have written this one. You should have written this one. This would have been a lot easier. Yes. So people, I think this, I am done. Yeah. Okay. Overall general analysis, people, I think it looks like the paper was easy. A lot of easy questions like slump sale and everything, you could have easily scored marks. In your compulsory question, you would have made adjustment mistakes in 1 or 2 adjustments. Probably if you have picked up question number 3, then you would have gone miserably wrong in that. You should have picked up 2 and 4. So that is one small thing we should have done. But if you come and ask me, honestly, not very happy with the paper, people. The assumptions which I had on the kind of important questions they could have tested, nothing of those got tested. They could have really tested you some important critical things. Missing out on default tax regime, missing out on capital gains, immovable property related questions was not the something I was expecting of. Question paper could have been a little more trickier than this, but okay, whatever it is, good news for you people that you have done a good job in this paper. Maybe yes, GST was extremely difficult, so compared to that DT they made it a little more easier for you to manage it off. I wouldn't say it was extremely easy, but it was definitely not difficult. You could have easily scored marks. On that note, people, from an average student perspective, how much you could have scored? If you have answered option number B in your question number 4, if you have answered question number A, then you would have scored 5 plus another 4, which is 9 marks. So question number 4 gets you 9 marks. Question number 3 is what I'm ignoring, people. From my side, if I would have answered the paper, I would have ignored question number 3. I would have answered question number 2, where I could have got another 6 plus 2, 8 marks. So 8 marks would have come here. So 8 plus 9, 17 is what I have in my hand right now. Yes, then question number 1, hypothetically conservative basis, it is another 8, which is 25. Yes, so 17 plus 8, 25 you would have got. MCQs, I'm pretty sure you should have got the whole 15 marks, which means 15 comes here and you have already scored 40. You've already scored 40. Great news, people. DT has already got you the paper cleared. DT has already got you the paper cleared. IDT, I knew the paper was tough, but let's be realistic, people. Let's be realistic. No matter how worse you would have done, some MCQs would have gone right. Your step marks would come into picture, and which means you have successfully cleared your direct tax and indirect tax paper. Great job, people. You have completed your direct tax and indirect tax paper. Paper number 3 is surely something which you have cleared for your exams. You have certainly cleared this paper for your exams. Paper number 2, paper number 1, if you've done a great job, then yes, overall set offs, you should be able to complete this paper off. If you have got an exemption on this paper, even better, even better. People, 20 marks in GST is not a rocket science. You could have easily scored that. So I am expecting exemptions are easily possible in it. Okay, let's say hypothetically the paper was extremely difficult. Don't worry, I say I will make sure that you get at least 50 out of this. This has been my experience from the September paper itself, that if the papers are extremely difficult, I say I would give you weighted average marks. I say I would give you weighted average marks. So technically you would have got the paper on your par. Yes, which means paper number 3 has been cleared by you people, and an amazing job from all of you. Amazing job from all of you. Paper number 2 was standardly easy is what I understood. Paper number 1 was a little lengthier, so therefore you could have made some mistakes there. But overall the group is easily enough to clear. So group 1 is definitely cleared for you people. Great job on that. Group 2, I understand costing paper has been a little easy. Today, I mean, I'm not really sure on how the audit paper and how the FMSM is. I have not discussed about those papers, but nevertheless, people, what I can see right now is that you are already on a good running pace. Yes, if you are consistently maintaining this, I'm pretty sure by the end of the 6th paper, you've already cleared whatever you wanted to do. And inter Jan 25 has been the last attempt. You are writing your inter. You are moving on forward to write your CA final exams. That is the good news which I can share along with you people. For the ones who maybe have not been able to score this 40 in DT because you've made some unavoidable mistakes in this paper, don't worry. Try analyzing it once again. Try evaluating your other papers also and see where you stand. If you see that overall you're not able to score that number of 50% which is required for you to clear the group, don't feel disheartened. This is just a temporary phase. A little more efforts from your side, you should be able to get through it. Therefore, focus on your May exams, people. Do not wait for your results. Take a step back, maybe start a little early, start better than what other people would start after realizing their mistake. If you start right away, maybe not right away, okay, it's a little too early for me, let me be realistic. Go enjoy some time, people. Take the whole January out. February you can start February you can start. Take some early time and start on February itself, people, because paper like direct tax and all for May 25 is definitely got amended, significant amendments in May 25. So you will need some extra time and efforts in those things. So take some additional time, people, and start in February itself. Start preparing now and then. If you clear, great, you have just learned something new for your articleship. If you have not cleared, this would be a good indication for you that yes, you have started early and you will have a advantage over everyone else who starts late. That is what I could probably tell from my side. But other than that, yes, you have successfully completed your exams. You are at a good pace right now. You have survived yourself through it, and that itself deserves a pat on the back. So great job, people. Continue this WIMS until you clear your CA, and we will see each other very soon as a qualified personals to each other. Yes, on that note, I will sign off from today, people. I hope you all had an enriching session with me today. For those who have any doubts, feel free to drop it in the comments and I will try to reply as much as possible to all your questions. Please avoid questions like, Rahul, I've done this much, only how much marks I will get? I've only attempted for this piece and therefore I don't know how much marks I'll get. Do you think if I've attempted only this much, will I get marks or not? I am not going to answer those comments for you, people. Yes, I don't want to be an examiner to you right now, trying to justify what you have done. That is not my job. I don't want you people to also getting into that. Yes, self-evaluation stops the day when you completed your exam itself. You don't have the opportunity to do it anymore. Despite you and me deliberating about it, marks are not going to change. Your marks have already been decided by ICI. So let's wait for that and you will get a better answer there. You'll get a better answer there. Please don't get into this mode of coming and asking me what kind of marks I can score and how much I should be expecting out of this. What you see in the discussion paper today is all that I could share across with you. You be smart to yourself and try to evaluate what you want. If you think you're able to pass, leave it there. If you're not able to pass, be conservative to yourself, people, and see what you can do. If you see a bit of a hint also that yes, you may not be able to clear the group out, why don't you start right away? It's okay, rather than coming and asking me and I coming and convincing you that it may be wrong. It's rather easier if you start preparing right away. Like I said, people, even if you start preparing right away, you're not going to get into a loss. If you end up clearing the group, it does not have any issues there, people, because eventually whatever you're going to learn extra right now for your May 25 is going to help you in your articleship. So it's always going to be a win-win situation. So never back out from learning anything extra. That is what I could give you as a suggestion from my side. But other than that, if you have any questions, if you think that there is an answer different than what I have given you right now, and if you have a difference of opinion, let's put it on the comments and we can deliberate about it together. Yes, on that note, let me close it for today, people. I will see you all very soon in your CA final preparations. Until then, take care. Bye bye.